Hey traders, Nick Shaheen here looking at Micron. As good a time as any to take this opportunity of it falling off a cliff. It's down 4% and suddenly because somebody said something about some big trade somewhere in the options market down to 41, some unusual options activity. So this is a good time to use this dip for some sort of a lesson. All right, so looking at a daily chart, this is a good place to start. First of all, Micron is fundamentally cheap. What does that mean? From the valuation perspective, from a PE, price to earnings, it's under 5. It was as low as 3, but everybody calls it a value trap. So that alone is not a reason to buy it. It sells at 1.5 times sales, probably close to book value, 1.5 times book value. So these are the digits here. Obviously, global company obviously has exposure to China, etc. But we're still going to need their products. So what can I tell from looking at this chart? All right, so this is the daily chart. Good place to start there. Will give me a big picture. All right, I'm going to mark it up a little bit. First of all, it's lower than where it started the year, not by a lot. It had a hideous downturn, a nice rally, this got cut short. This should have been beaten, but whatever happened here, okay, the May correction foiled this. This should have ended here somewhere because of an ABC move. So it didn't happen. It fell, right? But then we double bottomed, but the whole market bounced. This was the Christmas crash. So it made sense that we settle just above the Christmas crash. So this would be a pivot point. Look, it all matches up. And a nice rally. And this dip. So what does that mean? So within this rally, there are a whole bunch of levels. I'm going to keep it simple. If I look at this rally, halfway, the half-back test, they call it, is right around here. So if I look left, is this significant? Yep. It's a zone that has been significant for a while. So if it's falling now, I cut it off. This is 40, this is 38. So this is like just below 40, 39.5, whatever it is. So if I'm still long and I haven't booked my profits from here, today is not the day I get out. Today maybe I buy some puts to protect some of my stock, but I shouldn't do it when everybody's panicking out of it unless I know something that changes the game. This was a pivotal point also. So the whole zone here should be supportive just from that perspective, that half-back test. Okay, so let's see if we can get smarter than this. I'm going to go to 120, so 2-hour charts. So this gives me a little more closer to now pertinent information I can use. I'm going to zoom in even further because I just want to capture the volume profile of this rally. I don't want any noise from before. So looking at this tells me that I'm approaching the value area low. What does that mean? Volume profiles. So when trading happens, people buy it and sell it at different levels. And the platform should be able to tell you where the trades happened. This orange line is the point of control where the bulls and bears agree most, meaning the fight happened as hard as possible right here. Based on this set of data. So what is that? End of July to now. So this was pivotal. Onus was on the bulls to break through it because they lost it in the breakthrough it, and they failed today. So I look left to see where they're going to stop. Right there, right now at the value area. This is the highlighted bright yellow stuff. So anything, by definition, anything outside of that is unusual based on this action here. Unusual to what has happened here. Doesn't mean it's not going to go there. So what if it does go there? Okay, so I have another zone I would look at as pivotal here. Why am I pointing this out? Look, I'm almost coming back to that same zone from the daily chart, 39. So why do I look at? This would be the edge of it, and that is the 39. And this would be the stomach of it. So it's a rubber band zone. This is an open gap. So if you think markets are going to close all the gaps, I bet you a lot of experts, a lot of machines will be looking to see if they can close the gap. I think if they want to close the gap, they're going to do this, bounce maybe a couple of times, and then come back to it. So I would see it coming. Okay, so this was a quick lesson on what to do with charts using MU. This is not specific to a trade on MU. Fundamentally, I like the company, but I prefer selling puts in it when it's completely sold out, like down here. but at this point, I'm not touching it. Why? I'd rather be long the markets. Why? Because it doesn't have that specific China and whatever is going on today. I bet you we will find out. The trade apparently was too big. So somebody knows something. Somebody knows more than me. Let's put it that way. And I don't want to be the guy holding the bag. So specifically to today, I don't know. But the chart says that it has some support or at least pivot zones around 38, 39. So if I haven't booked my profits, I want to see what happens around 38, 39. If I'm nervous, I can buy puts to protect me for a period of time. Tons of contracts there. But once we do that, onus is on the bulls is to get above 43. So I'm no longer happy. I'm no longer expecting a breakout because now onus is on the bulls. The bulls are on their heels and the control is in the hands of the sellers if they can't break up above that point of control. All right, Nick signing out. If you have any questions, let me know.